No doubt. Speaking of economic forecasts, our next guest says when he tells people what he expects, they think he's out of his mind. He's calling for 4% GDP growth for the next 18 months. Here to tell us why, Bob Stein, senior economist at First Trust Advisors. He's a former assistant secretary for economic policy at the U.S. Treasury. Robert, your forecast based on historical patterns, by that measure, you might be a little conservative.
Well, sure. A lot of people are predicting that we're going to have very slow growth for the next 18 months, maybe even longer. We think, and this isn't for any particular quarter, but for the second half of this year and all of next year combined, real GDP growth should be 4% plus.
Yeah, but don't we normally have a big boost in the quarter coming out of recession?
You know, we often do because of inventories, and that's one of the linchpins of our 4% economic forecast. Right now, Mike, companies across the United States are keeping their production level even below the rate of sales because they have to clear out that excess inventory. We think that inventory cycle will be completed in the very near future, and that means that even if sales don't pop back up, we think they will go up, but even if they do not, companies will have room to raise their production levels because they don't have to clear out their excess inventories anymore.
When does that start happening? We're expected to see another contraction for the second quarter reported at the end of this month. We're into the third quarter. Are we growing now?
Well, we think that the economy probably contracted at a 2% annual rate in the second quarter, which is a little bit of a slower contraction than we had late last year and very early this year. Right now, on a monthly basis, we think the economy is probably growing, although fairly slowly right now. We think later in this quarter, we're going to see a clear pickup in economic growth. The unemployment rate, however, will probably take a couple of more months before it starts turning around.
Bob, you also, in your research, talk about auto production, auto manufacturing. You think this is actually going to snap back quicker than consensus?
That's right. We've seen a lot of auto production schedules suggesting that in the third quarter, auto production is going to go up by about 50%, given all the shutdowns we had in the second quarter. Now, if that happens, now autos are only 2% of the economy right now, but if 2% of the economy grows by 50% in only one quarter, that by itself raises the GDP growth rate by 4 percentage points. Now, the reason that we think auto production is going to go up and then stay a little bit higher than it has been recently is that if you look at the replacement rate of sales, it's about 25 years right now. Normally, we sell cars at a rate where we will replace all the cars already on the road in 15 years, not 25 years. So we think cars and light trucks have sold at an unsustainably slow rate earlier this year, and that pace will pick up over the next year and a half.
Well, it sounds with your forecast that you'd come down on the no side in the debate over whether a second stimulus is needed.
Yeah, we think that would be complete overkill. That to the extent that the stimulus is going to stimulate at all, and we do have questions about that, but to the extent it is going to stimulate at all, any effect will come later this year.
All right, Bob, a little bit shorter term. Of course, we're getting CPI out this morning, and this is going to be watched by the markets. What are you expecting, and how does this support your theory?
Well, our expectation for CPI is that it will be slightly higher than the consensus expects. We're expecting 0.7 on the headline rather than 0.6, and then 0.2 for core, excluding food and energy, rather than 0.1 that the consensus expects. To the extent that it reflects rising energy prices last month and generally increasing monetary velocity in the economy, we think it corroborates our view that the overall economy is going to pick up.
All right. Thank you very much, Bob Stein of First Trust Advisors. Nobody's going to complain, I think, if you're right.